So we are going to start on our second panel discussion of the day. The topic will be about, can decentralized finance and centralized finance coexist? So we'll be joined by 5 panelists, and I guess may I invite all the panelists to take a seat first, then I can introduce you one by one. Yeah, thank you so much. Okay, so for our panelists, we have a wide range. Oh wait, microphones, yes, most important thing. Sorry, and then I'll give this to Jones. Okay, sorry, so 2 microphones for 4 speakers. I guess I'll put one here and one over here. Yeah, thank you so much. Then feel free to get the water. Shake, doesn't work. Okay. So while I set up the microphone for Jones, so on your right is Jones, who will be the moderator for this discussion. Okay, yeah, thanks. So this works. So you can just speak into the microphone. So he's the blockchain director of our NUS Fintech Society for this year. And then on his right or on your left is Nigel, right? So it's Nigel, and he's the head of business development at ADDX. And on his left is Jeffrey, who is the senior engineer manager at Coinbase, followed by Siddharth. Did I get it right? Thank you. All right. Who is the blockchain investment manager at Vega Solutions. And our last panelist is Stacey, who is the Web3 lead of APAC and Japan at AWS. So yes, that's our list of panelists. So round of applause for them. Yeah, so I guess I'll pass the time over to Jones. Please take the floor. Is that the right term?
Can everyone hear me? Okay, great. So that's it. Yes. Great. So welcome everyone to our. Maybe I can move it. Yeah, it does. Right. Okay, welcome everyone to our second panel of the day. I'm Jones, co-director at the NUS Fintech Society Blockchain Department. I've been in the society since 2019. I've been the co-director since August of last year, or was it May? May of last year. I've been dabbling in DeFi, NFTs, crypto since God knows when, but yeah. So I've tried everything from OhmFox, ToomFox, Luna, Celsius, whatever you name it, I probably tried it. So yep, so enough about myself. Let's do a self-introduction for our panelists. So Nigel.
Hi everyone, I'm Nigel. I'm currently head of business development at ADDX. ADDX is a platform whereby we enable security tokenization. So asset-backed tokens that people can invest and trade, in particularly in the private markets. So in terms of experience in DeFi or CeFi or crypto, I've started dabbling in them since 2015. So been through the whole ICO boom, bust, NFT craze, as well as DeFi, and currently where we are today. Yeah, so thanks for having me.
Hi, my name is Jeffrey Lim. I'm a senior engineering manager at Coinbase. Coinbase, many of you may be familiar with our centralized exchange products. You can get a Coinbase app on your phone. You can buy and sell crypto. We also invest in decentralized protocols. We have an NFT marketplace. We have a Coinbase wallet app where it's self-custodial, and we have products around stable coins and DeFi yield and such. In Coinbase, I lead teams. I'm part of the international team, and we're looking at international compliance and how to bring our product to more international markets. And prior to Coinbase, I used to work at Google. You may be familiar with Google Pay, which was one of the teams I led to build the product that you see in Singapore, as well as prior to that, I did some work at Lucasfilm. I was the lead of the games team in Singapore 10 years ago. Thank you for having me here. I've been dabbling with crypto for a couple of years. I've been part of Coinbase for a year, so I'm a relative newcomer in this group, I think. Thank you.
Hello, everyone. My name is Siddharth. I'm blockchain investment manager at Vega Solutions. So at Vega Solutions, we empower like new entrepreneurs and developers to sort of build their own DeFi products. and we help them throughout their journey. Like we're pretty strategic with our investments. We do venture investments. We help them with our proficiency in terms of trading operations. As a firm, the team comes from a diverse background of trading operations in digital assets, like market making, OTC trading and all. So in like throughout the journey through technical advisory or some sort of like infrastructure help, we help the projects in sort of scaling further.
Hi, everyone. I'm Stacey-Ann. So I work at AWS, focused on Asia Pacific and Japan. So we have a team within the startups unit that's specifically focused on serving Web3. So for me, I started in Web3, well, I guess at the time, blockchain, right? The 2016-17 timeframe. Interestingly, my interest started in China with the boom of the mining, right? So that was quite an exciting time in mainland China. And since then, I've been working full-time in blockchain, working with decentralized identity, NFTs, metaverses, and now serving the role of helping startups and Web3 native VCs to scale and grow.
Great. Thanks everyone for the introduction. So we'll start off the first question of the panel. So the first question is, how are your companies interacting with DeFi, if at all?
Yep. So at ADDX, like I mentioned just now, we focus on tokenization of securities and assets. So this is what we use, which is a private permission blockchain. We leverage on Ethereum protocol, which is what we feel as the most widely adopted protocol at the moment. In terms of DeFi, our investor wallets accept cryptocurrencies as well as stablecoins. And in the future, there will be, stay tuned, there will be potential collaborations with DeFi protocols to make sure that our investors get a full suite of benefits in the DeFi ecosystem. So we are regulatory compliant. We are fully compliant with MAS. So we have to work very closely with the regulators, and we will progress along with regulation to make sure that our investors are always able to transact and invest in a way that is compliant with regulation. So that's what we do at ADDX.
Yeah, at Coinbase, I guess, as I mentioned, we started off as a centralized exchange, and we saw that really as crypto as an investment. Looking forward to the future, we really do see it as an operating system or a decentralized app platform that people can use. And a lot of the things that you want to do on DeFi, you first need to be able to get into the DeFi ecosystem. So we want to be able to provide people with that bridge. We do, as I mentioned, we do have our Coinbase wallet app, which provides self-custodial and access to a number of different NFTs and services on the Ethereum blockchain. And I think in Singapore, you may not see the full range of products that we have available for Coinbase. We obviously are working hard to see what we can do in this area, but stay tuned in the next, in the future. We hope that we can share quite a lot of DeFi services, even within Singapore.
At Vega Solutions, like I will see, like for the DeFi protocols, there definitely are like a venue for liquidity in our trading operations. Apart from that, like as I mentioned, for our venture investments also are pretty strategic. So in terms of helping like the new incubation projects with infrastructure, we have a few things in place, or like so sort of for bootstrapping them, their initial liquidity and all in different ways where we can help those protocols out. So we're pretty hands-on in the way we do interact with DeFi. Apart from like just being the users of DeFi, we are planning on incubating a tons of different projects on DeFi. Like there's one called Native, where we are sort of trying to help projects bootstrap their own exchanges. So there are tons of different things that you guys might find out about in future.
For AWS, there are two different ways, right? So on the first hand, using Jeffrey's example, we do love DeFi. And in order for DeFi to exist, obviously there has to be an infrastructure in place. And they do need to build on secure and compliance services. And so for AWS, right, we offer our core sort of computing, storage, cloud serverless infrastructure for a lot of the DeFi players in the space. For the second piece of how we work with our DeFi partners is with funding, sort of introductions to VCs, helping with liquidity and go-to-market. And that's one of the ways that we're becoming a bit more vocal about within the community. So maybe some of you already know that AWS actually has been in the space for quite so many years. Now that, we have full senior leadership buy-in into the future of Web3, we're going to be a bit more vocal about the support that we're offering the space and DeFi in particular.
Great. So I think we can see there's like a fair balance of how often each of the companies interact with DeFi, from AWS providing nodes to ADDX having your own permission blockchain, also interacting with DeFi. So I think now we can move on to a bit more company-specific questions, and also perhaps bearing in mind that these questions are also not only intended to educate our audience here, but also to help the hackathon participants come up with some ideas. So I think the first question for Jeffrey, yep. So I understand you're a bit of a compliance software development expert per se. So the question is, what challenges or opportunities do you see in the sort of intersection between DeFi and CeFi? And this can be both from a technical software development standpoint or even like a compliance regulatory standpoint. So what kind of opportunities?
Let's talk a little bit about regulation and compliance, because I think CeFi and DeFi technologies that people use to build products, but not specifically Singapore government, because I think Singapore government is much more technically forward than most others. But governments tend not to look at the technology. They look at the end product and they want to figure out how can we make this safe for our citizens, right? And if you're a toy manufacturer and you create a toy that explodes, right, they're going to say, well, why is that battery, like what is that thing that's causing this problem? And I think that with all the events that have happened recently, many governments will be looking at, hey, irrespective of the technology involved, how can we make sure that our citizens are safe when using these kinds of products, right? And I think there is a mismatch, a little bit of a mismatch in the goals of DeFi, in that being a very open, scalable, composable. You can do what you like, and you don't have to have KYC, or people don't need to have knowledge. And some of the things that governments would want, right? Governments want to know exactly what's happening. They want to have control. So there's definitely a tension there, and there's discussion that needs to happen to figure out how to marry these two things, like the things that the technology provides with the things that the governments want. And we see this happening around the world, that there's been increasing regulation on the crypto space. And we see that it's for the purpose of protecting for the customers. I think compliance is often spoken in like negative terms, like we're being restricted, but we just should look at the benefits that it's trying to bring to people and how we can make sure that we're not inadvertently financing terrorist organizations or enabling money laundering or things like that. So I think there's a lot of discussion that needs to happen. There's going to be new technology that gets invented to help solve some of. And I think there'll be some processes, maybe even the crypto industry as a whole will figure out some way of validating the trustworthiness or proving that certain products have had a certain level of auditing and guarantees of safety that would make governments feel comfortable. And I think we're still in the very early days of this. There's a lot of discussion in this area, and there's no obvious silver bullet, but these are some of the challenges, but the opportunities that come from it are all around the products that come out of it also. So I do feel that if you're a user of a bank, you don't care if they're using SQL or NoSQL. You don't care if they're using ISDN or dial-up or broadband or whatever. You care about the product. And I think the same thing is true if you're looking at DeFi or CeFi. They'll look at the products that you're offering, lending, borrowing, insurance, the whole range of things. And they'll look at, well, what's the rates that I can get with this? What sort of costs, what's it costing me? And I think that the opportunities from these technologies will give customers better products. And that's really where we want to be heading.
So if I understood correctly, you sort of said we still have sort of a long way to go before the regulations, the compliance can be fully in place for CeFi and DeFi to really merge together, or rather for the government to sort of accept it?
I think even CeFi is not well, like the regulatory frameworks in some parts of the world are so vastly different than others. And crypto blockchain technology really isn't something that you constrain to one location. We don't want to end up in a situation where it's a lowest common denominator, where one jurisdiction says this is the thing that must happen and then suddenly it becomes the standard. I think we need to engage with the governments and find the right level to provide customers with the protections as well as companies with the opportunities to innovate. Like these are the two tensions that are happening.
Great. So moving on to the next question for Siddharth. So the question here is, as I understand, Vega Solutions, formerly Autonomy, you guys do interact with a lot of smart contracts as you would if you do trading. So my question is there ever a need for thorough due diligence of the smart contracts, especially in the case of oracles where the prices of the very products you're trading on are in question? And if so, like how does your company do this?
Yeah, I think smart contract auditing is like very important, and that's one of the reasons where CeFi use cases come in. Like with CeFi, all these things are abstracted, but if you are interacting directly with DeFi protocols, you should be auditing those smart contracts. You should be understanding how they're working properly. If you look at like the past few years, I think more than $5 billion worth of assets have been hacked. So internally, like as a team, we do what we have tried to do is we have built an internal proficiency across different blockchain stacks, like be it Solidity on Ethereum, be it like Move on Aptos, or like different ecosystem have different independent tech stacks. So we sort of rely on internal audits, and we do look at external audits. And if say a certain hack has occurred, so we try to stay up to date and why this hack occurred, how we can sort of improve our own coding practices and all that. So that's very important. One thing that for the Oracle part that you have mentioned, I would say, if you look at the past hacks, the biggest one were the mostly like the bridge ones, which were due to like cross-chain communication. I'm not going to talk about that. But apart from that, like I think the other big ones are the Oracle manipulation attacks. So if you want to understand that, I would say first of all, you want to understand what kinds of oracles are being used in the industry right now. Right now, there are mainly two kinds of oracle. One where basically, like if you consider Chainlink, where there are few reputed organizations, few nodes, which are providing you with the real-time information of different, like say price oracle, if you want to consider. And in their case, it's similar to what you consider with a block, like a Bitcoin 51% attack. Like for a Bitcoin 51% attack, if you gain that much like equipment and that much hash rate, then it makes a lot more sense for you to keep the network running. You will make a lot more money than instead of attacking that. It's a similar thing with these like Chainlink kind of oracles, where basically if those reputed organizations were to manipulate and take false any prices and all that, then they have more to lose than they have to gain. Other kind of oracles there that are in the market right now are those TWAPs, or like they directly rely on DeFi protocols. So I personally feel like oracle manipulation is a very big attack vector for any DeFi protocol. So if you want to look at that and how we try to quantify it, is like the cost of manipulating the oracle should be more than the incentive that is there for offer by attacking it. If say you look at Cream Finance hacks, so there was a very small like liquidity pool for a certain asset that was accepted as collateral on that lending and borrowing platform. So by manipulating its price to be, say, very high, set the price to be infinity, they could drain the entire pool. So for manipulating it required like 1 million, 2 million, something like that. But the assets that they could get from that was around 130 million. That's what hack. So that's the way you try to quantify those kinds of things. Yeah. That's in general, I was.
Okay, so I guess with ADDX, right? You guys are a private permission blockchain. So you guys don't really have this issue of reliability of prices because you guys provide the prices yourself. So the question here is just what are the pros and cons of DeFi compared to a permission private blockchain like ADDX's?
Yeah, I think the first pro of DeFi, when we look at it from taking a step back, is that with DeFi, there's total disintermediation. There's no need for a single point of failure. And that in itself, with the algorithms, they're able to determine pricing. So when you look at the DeFi players like Uniswap and Aave, that's how liquidity providers and people who demand capital, they transact. Whereas in ADDX, because we are a private permission blockchain, we are a centralized platform where we determine price matching, and we have transactions happening only from like 9 a.m. to 5 p.m., similar to how the CeFi is being conducted. So that is the pro when it comes to you want anonymity or you want automatic way to price discover. That's the pro of DeFi. The cons of DeFi versus something like what we do at ADDX, which is a centralized exchange, is that the lack of regulation. So we think that, you know, as long as there is an algorithm or smart contract, everything will run smoothly. But what if the smart contract fails? Or what if we perceive something as DeFi is not actually DeFi, right? So there's this argument versus maybe like for Luna, was it really DeFi? Was it centralized? Why was a few actors able to command so much power to really flip the table around? So that's one of the con. The second con of DeFi versus CeFi is that because there's kind of no centralized actor in the DeFi world, it's very difficult to enforce whenever something wrong happens. And that's the current situation in a lot of misunderstanding of what happened in Luna or what happened in the other platforms. I think as we go forward, there will be a need to hold people accountable, even the creators of such systems. And that will be something that helps DeFi go to the next level. Without it, then there's too many choices. There's too many platforms that people can provide liquidity in, and it becomes a very heated competition, and people move, the switching cost is very low, and they move their capital in many forms. So I think CeFi gives the level of authority and the level of trust that people who are more traditional, or they are more, they want to be regulated, they want to trust enforcement action, that's where people will flock to. Yeah.
Yep. So maybe this question will be both for Siddharth and Nigel. So I would assume you guys interact with a lot of clients, and I think Nigel also brought up that a lot of the clients prefer to use some permission private blockchains. So I'm just wondering if, from your experience, do clients prefer DeFi or CeFi? Because as I understand, if you use liquidity pools in DeFi, you got a large order, you're gonna get a massive slippage. You're gonna lose tens of thousands of dollars just because the liquidity pool can't handle it. You know, so I'm just wondering, from your experience, if I were a large client, CeFi or DeFi?
I think so. It depends on use case. In certain cases, CeFi fits better. In certain cases, DeFi fits better. Like if you consider normal retail users, so you may agree with it or not, but a lot of people in this industry are here for short-term gains, like speculating on those altcoins, getting that 100x and all that. So for all those assets, like the barrier of entry to get on a tier 1 exchange like Coinbase or Binance, it's higher. Like they curate which tokens get listed there. But anybody can create a pair on Uniswap. Somebody can tweet about it. It will go 10x, 20x, and people will want to buy it. So for those users, the liquidity will always be there on the DeFi side of things. So for them, it makes a lot more sense to go like the DeFi way. So for how we see is, it's basically like venues of liquidity. For certain tokens, like DeFi fits the use case better. For certain, CeFi fits the use case better. For second, like for the more systematic players, if you see, I mean, like if you want to sort of do this distinction between CeFi and DeFi, you first need to understand like digital assets in general. Like a thing about this is like, say, if you deposit money into a wrong bank account, then you can reach out to your bank. There is someone you can reach out to. But in the case with digital assets is, if you do that in a wrong way, there is no way you can get that assets back. So CeFi basically abstracts all that for you, and you don't have to create your own wallet. You don't have to do custody and all. So for those kinds of users, like CeFi use cases fit better.
Yeah, to echo Siddharth's point, I think it really depends on the client. In ADDX, we generally have clients who are less tech savvy. So they will want a solution where the front end, the UI UX is already code-free. There's really nothing much they need to learn. All they need to do is to press a button. Even if they want to invest, it's all a few clicks of a button. But if you are a more technical person, you understand liquidity pools, you're able to do yield farming, you might want to use Uniswap or Compound and things like that because you understand how to optimize. But if you're a client who maybe came from long ago, or you're older, you don't understand the technology, nothing against older people, some of them are very technical, but that would be, you want a solution that is plug and play. So I think it really depends on the use case and what you want to do. That being said, DeFi, sometimes there's a lot of slippage when it comes to very large, chunky transactions. You might want to work with a CeFi player in order to do over-the-counter trade so that you reduce the amount of slippage. But that is for very fringe cases. I think for everyday users, it's still relatively negligible, the differences between CeFi and DeFi transactions.
Okay, I think this is a good segue for our question for Stacey-Ann. So there's a lot of talk about DeFi, centralized versus decentralized. So from a business perspective to AWS, is there really a difference about how you approach these stakeholders as partners? So are there different needs for CeFi stakeholders, DeFi stakeholders?
So before answering that specifically, you could take a step back from the AWS perspective. We work with every aspect of Web3, you know, from the layer ones to the tooling and scaling layers to the apps and the exchanges that go across all three layers. So for us, right, that's the underlying theme for us with the Web3 team, is that we look to support all segments of Web3. For DeFi versus CeFi, we do see a bit of difference in needs in terms of what solutions that our customers are working with us on and what our partners are asking us for. I think some of it was mentioned before, right? With the CeFi players, right? You're looking at incredible volumes, right? That's one of the things that, you know, CeFi has just done really well. And to Jeffrey's point, in order to get into DeFi, you do need an on-ramp, unless you're doing, you know, some Bitcoin ATM or, right, you're walking around with a suitcase load of cash. So, you know, CeFi is an important aspect of on-ramping into DeFi. So the volumes aspect is really important. I think the second piece with our CeFi customers and partners is the security and compliance, right? Because CeFi is taking the brunt of regulation for Web3 right now. And that means that the underlying technology has to be secure and go through the complexities of becoming compliant for any regulatory body. For the DeFi side, right, what we are seeing, you know, slippage has been mentioned before. So the ability for the high frequency trading, right, being able to compute or having instances that are able to manage extremely large and scalable workloads. And so with our DeFi customers, you know, that's one of the things that we see being asked of the most often. But, you know, separate from that, from our core sort of cloud services, what we are working on the separate side is our managed Web3 products and services. And so we work actually quite closely with our CeFi and DeFi partners to understand what are the pain points that they're going through so that we, as a tech company, can start to build more Web3 native solutions that we can ship to the community. So, you know, those are some of the things that excite us.
Thanks for that, Stacey-Ann. Yeah, I think we have a pretty thorough discussion from the individual companies. So right now, I just want to zoom out into a more broader perspective. And I like this to be a discussion, of course. Like I would love some sort of a back and forth here. So the question here is CeFi really just a front end for DeFi? Or do you feel that they fulfill different needs in the market? Because for some context, if you guys are aware, there have been some CeFi platforms that have been taking clients' money, using it for investing in DeFi, and they take the spread, if you want to put it that way. So is CeFi really just a front end for DeFi, or do they fulfill different needs? Controversial, I'm sorry.
I think it starts off that way a little bit because people first get into the whole DeFi system by using a CeFi system. But I do think that there's a whole lot of, I was talking to you just before this session about how technology is used and people don't even realize what the technology is. They just want the best product, right? And one of the examples I like to talk about is just vaccine certificates in Singapore, right? If you're not aware, the vaccine certificates in Singapore are backed by the Ethereum blockchain. And it's backed by a technology called Open Attestation, which is created by GovTech also. I guess what I was trying to, I lost my train of thought a little bit.
They just want the best
CeFi is
product.
Sorry?
They just want the best product.
They just want the best product, but is CeFi the front end for that? And I think like if you look at the vaccine certificates, right, it had incredible reach very quickly because some of the properties of DeFi development, just being open, composable, and no central owner, meant that the other countries were like, yeah, we'll get on board with that. So vaccine certificates are across 5 different countries. They're probably not used much anymore, but they were used. And I think that there's opportunities to build products in DeFi space that have that kind of reach and that growth and that kind of usage. And then maybe CeFi figures out how to leverage that or how to get people to use these things. But I'm not sure that we're at a stage yet that we can isolate the two. I think that it's still very early stages for this. And there's going to be developments where some things may only ever exist in a DeFi space because of the properties of how these things get built. So the vaccine certificates is always just going to be something that is globally shared. It's not something that the Singapore government owns. And I don't know the answer to this, but I'm just using this example, perhaps as a way that the nature of the system enables perhaps some applications that we haven't even thought of yet. It provides a platform for this, right?
If I could add on to that, I would say, building on what Jeffrey mentioned, right? Moving forward, there will be solutions that will fit for mass adoption. There will be solutions that will still be appealing to early adopters, and there'll be solutions that will still be appealing, right, to the coders, right, and the degens who will absolutely not partake in, anything simple and seamless, right? So, the understanding of will potentially CeFi become a front end for DeFi. I think there will be some instances, and for some users, that will be the case. I think there will always be a subsect of users and use cases where directly interacting with DeFi protocols will be the option of choice, simply because of some of the fundamental values, right, around anonymity and privacy that, still holds true for a lot of people in Web3. So it's quite an interesting sort of discussion, right? Because to get to that mass adoption, yes, we do need a simpler interface for users, but there will still be applications, uses, and users who will prefer that sometimes very difficult experience with interacting directly via DeFi. But I do love the examples. I worked on that project for the vaccine certs. It's one of my favorite examples. So thanks for sharing that. Yeah.
Not DeFi related.
I know, right? Yeah. Yeah.
I think one more thing I want to add is I think going forward in terms of digital asset trading, one thing that you will see is this distinction between CeFi and DeFi will keep on getting narrower. Right now, if you see CeFi exchanges like Binance, they have their own offerings of an AMM, I think it's called BSwap, which is like a DeFi product. In terms of the DeFi side of things, if you go to different aggregators like 1inch, 0x, they have integrated different private market makers. So it basically off-chain pricing by certain systematic players and on-chain execution in trustless manner. So there will be ways where distinction will go away, but I still feel you're talking about centralized exchanges. A layer above it, it's people are still trying to get ETFs approved. So that's even more simpler for the traditional finance players. So I think there will always be a certain level of abstraction needed because even if you can make the whole DeFi exchanges better, there's still there will be phishing attacks that people won't be able to handle. It's the whole custody and handling the interacting with smart contracts. It's still too technical for a few people.
Yeah, I agree. One reason why there's a concept that CeFi is the front end for DeFi is also because of the difficulty level you are required when you interact with DeFi. a lot of people, they see like Gemini Earn or some Earn program as the easiest way to earn money. What they don't really know is what happens behind. How is this yield generated? I think even in the next 2 to 3 years, it's still very likely that the platforms with the better or seamless UI UX will be where most of the traditional money goes to. And how it's being generated, I think there can be much more transparency as to how all these yields are being generated. That will help make it very clear the differences between CeFi and DeFi. But I also agree that the lines are blurring and there's not much education out there as to what's the real differences to the normal man on the street.
Would you say it's more of there's not education, or people just don't actually care about the differences? Because I think we've mentioned that people just want a good product. They don't exactly want to know the differences in the underlying mechanisms. So
yes, I think people used to want a good product before 2021 and 2022, but I think after what happened, they start opening their eyes a bit more, because the best use might not hold for long.
I feel that personally. Yep.
Maybe I'll add to that. I take the view that people do want the easiest to use best product. And I think that's part of where regulation comes in, right? Because the governments want to make sure that when people see a product that is advertised to them, that they participate in, that they're not going to suddenly lose their life savings, or they're not going to get hit with something like that. And I do think that ease of use at the end of the day is what drives a lot of people to these products. It's got to be easy to use, it's got to be safe. And part of that is also how regulation comes into all of this.
Yeah. One more thing, I think as a VC, like one thing that I used to think a lot for the past 2 years is like, do people really care about decentralization or not? But I can sort of say like how the recent incidents have transpired. Like now I can say people care about decentralization.
So would you say it's more about decentralization, or is it transparency?
Like trustlessness in general. Like you don't want to trust any intermediary right now, because
So that's why Binance came up with the proof of reserve, very well received. I believe Coinbase also something similar, if I'm right. Okay, sorry, maybe I might remember that wrongly. Yep. So so we can open some questions to the floor if anybody has any.
Yeah, so learning from the previous panel discussion, I've created a Mentimeter, so you can use the link over there, enter the code, you can submit questions anonymously. So yes, but if you want, we can also bring the mic directly to you if questions right now. So both ways work. Yeah, understand that, Singaporeans, we can be quite introverted, so this option is open now. Yeah. So anyone has any questions to ask right now?
Sorry, I think Jeffrey wanted to say.
Yeah, I was just going to quickly say, I think one of the things that you mentioned earlier is that people are getting ideas for the hackathon project.
Yeah.
And I just wanted to plug that there is a workshop that is being run in a couple of weeks just on Web3 technologies. I think Coinbase is running that on the 19th here. So that will also help you gain some ideas on what you might want to build.
Great. Just it's good to show one of our workshops, Yep. So any questions from the floor?
Online also, feel free to submit questions. All right. Just wait for them to digest a bit.
Yeah, just really curious. Obviously, we're in a build/bear market. How are you guys and your companies thinking through what improvements you'll be making and what you're looking to work on during this bear market in preparation for the bull market? Well, or hoping the next bull market.
I'll go first since I got the mic. I think Coinbase has repeatedly said that bull markets are where we get to take our time to breathe and build for the next run, right? There's so many crazy things happening during the bear market. During the summer, so many things are happening that you can't take a step back and look at how you optimize your processes, how you bring new products to market. You're just trying to make sure your existing stuff works. So we're taking this opportunity to build. We've launched we launched in Australia a couple of months ago. We're going to be launching in more countries going forwards. And we're going to take a look at all of our existing products and see what we can do to streamline them, make them more efficient, just in terms of our internal systems and scalable. And hopefully that will set us up for the next time. And there's no doubt that the last few months have been trying on the company, right? There's been news about Coinbase, but we also do see that these things are cyclical, and that there will be, if we build for the future, then we're setting ourselves up for that.
I was also surprised when he said bull market is time for to breathe. But yeah, I think as a firm ourselves, we have gone through a phase of restructuring, and right now what we are looking at is like be a lot more hands-on with the way we are investing, be more strategic in terms of how we can help different DeFi protocol bootstrap quickly. Personally, also, we are trying to incubate a few projects which we feel like there's some real world use cases that still need to be filled in terms of DeFi, and we're trying to use our proficiency to sort of fulfill that.
Yeah, I think for ADDX, right, the bull market actually creates an opportunity. The bear market creates opportunity for us because we have not really been active in cryptocurrency space for the last 2 years. So this bear market gives the participants in crypto a way to take a step back to look at what are the technologies that will create more real world value in the future. And we strongly believe that security tokens and the way we back assets in a regulated way so that people can trade, can fractionalize assets, and that they are interoperable in the future. That will be what we will focus on technology-wise. We also focus a lot on custody, enabling self-custody of digital assets, not limited only to cryptocurrency, but also to stable coins, CBDCs, hopefully in the future, and even security tokens. That's where we think there will be a lot of value unlocked because the world is actually flush with illiquid assets that have a lot of potential to be unlocked and traded.
Yeah, again, I totally get the illiquid assets, but all my NFTs are going to zero right now. Yeah, so anyway, we can go ahead with the question we have here. So the question is, how might the relationship between DeFi and CeFi change over time, and what factors might drive these changes? Bit of a broad question, but
I guess, I don't know, anyone can answer. There's actually quite a few, there's actually 6. So we might have to be a bit selective about how we choose.
sure, could we see them all?
We'll start with this one first.
I think, like as I said before, I feel like for this, the distinction between both of them will keep on getting narrower. The future of digital asset trading will sort of take the best qualities from the DeFi, which is the trustless nature of it and decentralized part of it. And like for the CeFi from side, it will take like the immersive experience, like easy to trade, easier user acquisition, like those kinds of things. Yeah.
Great. The next question.
Do I click next? Next question.
Yep. I think we saw answered this already.
Okay.
And this is a bit more of a technical question. So what are your thoughts on decentralized infrastructure replacing centralized infrastructure in DeFi? And is it moving towards the right direction?
Okay, I will contribute something in the more traditional way. So recently, the MAS launched this Project Guardian, which is a combination or collaboration between DBS, JP Morgan, as well as SBI Digital Asset Ventures or something. The key of doing so is because they wanted to see how decentralized finance infrastructure can be the future. So what they actually use, one of the use case is FX transaction between Japanese yen and Sing dollar. The other use case was using digital Japanese yen and Sing dollar to invest or trade for Singapore government securities and Japanese treasuries. And what they found out from this short experiment was that the DeFi infrastructure was able to create a lot of efficiency, cost savings, and instant clearing and settlement. I think regarding my thoughts on what this means is that for centralized finance players or TradFi players, they are really taking a serious look into how decentralized infrastructure can improve their current ways of working, and this will result in a lot of efficiencies in the future.
Maybe this question is also relevant to AWS, because I do understand that a lot of nodes in Ethereum are run on AWS. So I'm just wondering if you have any thoughts on the question.
That's quite an interesting piece, right? Because I think everyone has seen the tweet, right, around we have no comments on that. But for us, actually, for AWS, we are quite excited about Web3 and competition in underlying infrastructure for Web3. And so what we are focused on is ensuring that we are helping to empower the builders so that they can build better. And at the same time, we are also investing in learning from Web3 in order to create better products, better services that could evolve. Now, whether or not, that's going to be an evolution into a completely decentralized, that's something that's yet to be seen, because there are still some security and compliance aspects, especially around scalability, that comes with, serverless infrastructure that is, from big tech. Compared to, let's say, some of the infrastructure players in Web3. Actually, I'd love to take it from the other side, right, which is the CeFi DeFi discussion that Nigel was talking about. It reminds me of the whole sort of internet thing that, not thing, but the internet boom and bust and boom again. Similarly, right, we had so many different players, right, like massive server rooms, it was difficult to access the dial-up, right, and it only became easier and with a lot more users once there were these larger players that were aggregating a lot of this work to make it easy for the user, right? Going back to what we were talking about, it's really dependent on how easy it is for the user. So in terms of CeFi replacing or being replaced by DeFi, I think it really will be folded into a lot of CeFi, which Nigel mentioned. And again, there will still be those folks who want to use DeFi as its original state, but we can't cross that adoption chasm without that ease of use. And right now, one of the great things is that a lot of banks and a lot of central banks have already invested years of research and sandbox programs around using blockchain technologies and working with Web3 players. So I would say it's not so much around we see it a full replacement, but how is it going to be folded into some of our existing systems? How is it going to change in some of our systems, right? Because it's not just the underlying tech. It has to be about how people interact with it. What are the regulations around it? What are the risk and control aspects? And what's the accessibility, right? Because obviously with the whole Bitcoin movement, right, it was about accessibility for users. So I think, that's how I would look at it.
Thanks for the response. We have another question. Well, this one's got 7 likes.
Yeah,
that's
so
a lot.
Sorry. Yeah, so this question just came up, like suddenly it got upvoted. So 2 questions suddenly received a lot of likes. So it will get pushed up, like, the priority. So
Yep. So the question is, would BNPL models work only in centralized finance? It seems impossible to launch BNPL in DeFi since we cannot effectively detect one's credit score. What are your thoughts on this?
I'll take a little stab at this. I think in the DeFi world, right, you need to collateralize. And I think over time, we're going to look at how we can collateralize even more things that we currently cannot. And maybe right now we think about BNPL like purely in terms of can you pay back that in cash? But in the DeFi world, maybe there are things you can tokenize that you can use as collateral that eventually will be sufficient to service the loan should you default. So I don't think that the systems are in place yet for this, but I don't think it's something that can't be done longer term if you have something of value that could be put into a token that is currently just not being considered in your capability to service a loan.
If I could add on to that, right, so this is part of the work of the self-sovereign identity movement, right, which predates actually the whole issue around soul-bound tokens, right, which is sort of the idea of you bringing your ability to interact, repay, be trustworthy to DeFi. So the original movement, SSI, is focused on, okay, well, how do you tokenize different aspects of your trustworthiness and bring only those aspects to a protocol to prove your, let's say, credit score. And so actually that work is ongoing in the identity community around how do you first segregate different characteristics of your trustworthiness and then bring that in a decentralized manner to DeFi. So the self-sovereign identity movement is working on this aspect already.
Great. Okay. Yeah, so I'm guessing this is one of the hackathon ideas. That's why they are such a specific question. But yep, so next question. Maybe one last one.
Yeah, let's see how technical it is. Okay, KYC and
This one's a bit of a technical one. So the question is, how do decentralized identity solutions enable DeFi protocols to comply with your KYC and AML regulations? So very technical.
I think regulations in general is a very tough nut to crack about digital assets, because this asset is supposed to be above and beyond any sovereign state or anything. But the biggest thing about this, I feel, is like how to do, even with like centralized exchanges, you can still like say, okay, you limit the fiat ramp in certain jurisdictions, you can do stuff like that. But in the DeFi case, like I seriously don't think anybody has figured that out. There was a recent case where a certain regulatory body charged a DAO. So what does charging a DAO mean? Do you like anybody who has voted on a proposal, would they be charged and all that? So I think it requires a little bit of active discussion between like the technical players in the space, like people like Ethereum Foundation and the regulatory bodies and all. But we'll see how it pans out. I mean, this question is a bit difficult to answer at this point, to be honest.
So just going back to, I think the aspect around Web3, obviously started on the blockchain side, but outside of the Web3 community, there's actually quite a lot of work going on around digital identity. And now the discussion is around, okay, how do you marry digital identity within Web3? So actually there is the work happening now where, for example, you have edge wallets, right? Where your entire identity lives within your wallet. So going back to Jeffrey's example about the vaccine certificates being based on Ethereum, I think they're about to launch it on Polygon as well. So anyhow, so work is going on around how do you give individual users their decentralized or their DIDs that they can hold within their device, that they can then choose which aspects of their identity will they connect to a DeFi protocol in order to satisfy what are the requirements for KYC without revealing what are any other characteristics that are in their wallet on their edge device. And so that work is ongoing, and there are prototypes already existing. Actually, there are some Singapore-based DID companies that are working on this for Web3, for healthcare, and for education. So it's happening. SSI is, the I guess technical name of that industry is who's working on it. And that's making its way over to Web3 because it previously was living outside the realm of Web3.
Yep, I think that's all the questions we have for today. Thanks, panelists, for joining us. I'm sure if anyone has any questions for them, they'll be more than happy to take them. Yep, so thank you very much. Thanks for your time. And I think the next panel will be at 3 o'clock. So come network a bit, have a break, have a drink.
Yeah,
Thanks.
wait, so yeah. Yes. Wait, so before you go, we would like to also once again just present like a token of appreciation. So if you could, we have some goodie bags as well as a travel tumbler for you to bring along your journeys back to, I would presume home or the office. I have no idea where. So, okay, let me change over. Okay. So once again, also shout out to AWS and Vega Solution for sponsoring our event today. So thank you very much.